Good morning. 9 day of June, 6/9/2013, 8:28 a.m. Pacific Standard Time. EQIX, one of the best bull runs of a lot of equities. We got up here to $230. This is a weekly chart, but here's the part. There was some headline news about the IRS and its REITs and what it does. It caused the stock to sell off, and for 3 weeks in a row, it violated the 10 week, the 20 week, and now has violated the 50-week moving average. We hit a low of 187. So in the short term, I'm going to tell the MMTs that we're oversold. This is what it looks like on a weekly chart. And this goes back to the November 2012 lows when it had sold off, but rallied to make all-time highs, consolidated in a trading range on a weekly level, and made another, well, it came right up and tested those highs, and now we're down here. So that's the November 12th rally of 2012. When we look at the daily of it, we can see here that we're down here at 192 on the daily. This is what a daily chart looks like. So we go back over here to the 172.50 area. We go back into this time frame, which was December of 2012. These were the lows that we had. Then was 179.70. So we're going to look at how the equity will eventually, on this daily chart, here's the candle where it closed. The actual closing price is 192.57. We're going to be looking at what the call side of the market would look like at a major support level. Now, for the sake of it all, let's go to a monthly chart. Here's a monthly look. This is a major monthly moving average called a 10-month moving average at $203. The stock violated it before. When we got back here in the November rally, that 10-month moving average was rising and giving it a great support for the rally to the all-time highs. The last quarterly earnings report a couple of months ago was that the earnings weren't that great, but the stock went up. So when we look at where this particular 20-month moving average at 176.450, that's going to be the key. Where we hit this 187.50 and we bounced up on this, and it's a monthly wick. It's just starting the month, but our resistances are going to be selling into or shorting into the 10-month moving average on a monthly level. On the weekly level, it will be the same thing, will equal the 50-week. It's a weekly moving average that when we trade off the bottom and we come up, that's going to be the wall of resistance, and we would look at selling short. Because technically the stock is broke from an extreme bull to a bear chart when all of these weekly moving averages and closing below them and everything has happened in EQIX. One of the things that we'll do is we'll go to our options chain. We'll go over here. We're going to find out what the best plays on EQIX at the support levels would be. We'll look at some of the options. They have only monthlies. They do not have weeklies. So we'll be taking a look at where these lower support levels would be. One of the things that I'll emphasize right now is I will pull up a call chart at a 180 call. Even though it closed, that's 180 call in the money. But let's go to 185. Here's a 185 on a monthly level. The calls were $38 a contract. They've come all the way down here to $8. Now, yes, we did close at 192, so we're looking at the 185 in the money. Now, just so you can see it a little bit better, I have it on a weekly format. This is what happened. When these calls get inflated up here, they had to come down. $8 is that low. When you look at a daily format on the calls, well, it doesn't show much because there's not a lot of contracts traded. But once again, they are in the deflated area. As we find the support level, we can see that this is a regular 185 call. If we go to the 190 call, and I click on it, this is the data of $21 down to $5. That's the 190 regular monthly call. It's slightly $2 in the money. Starting tomorrow morning on Monday, we will set the alerts on this and find out where the actual equity now, this is the EQIX, will hit that support level and where we make our money. And the thing about it is 187.50 was that low. That's why we were going to look at the 185 calls. If we drop down here and hold this area, this weekly support where it gapped up back in December, November, and December weekly, that's going to be that lower support level. We could trade down there before it finally gets to the bottom put in. Short term right now, it is oversold. And the bears are on top of it. So we're going to use the weekly. We're going to use the call side of the market to look at once we hit on a daily level. These lower support levels are going to come in. Here's these bottoms at 172, but we're going to be looking right over here at where this daily breakout level happened. It's going to be between, this is where they brought it up. That's the 185 area. That was on 12.12, and there's 187. This is the 184, 250 area in this breakout bar right here. And as we traveled on up here. So I'm going to conclude EQIX. It's the first time it's had a major sell-off in a long time. There are other times that it got sold off back in 2012. But it's a very strong stock. As it goes through its problems, the 200-day moving average, which is right here, it's a simple daily moving average at 204,620. If we do get a rally up back into there, those other key weeklies and monthlies that I showed you, this is we could shoot up there, but the chart is broken. It's oversold. We're going to get ready to make money on EQIX.